Do you really need $1,000 in order of you to start trading? I understand that you've seen videos out there or people being able to take accounts from $1 to $1,000, from $100 to $100,000, from literally $1,000 to $1,000,000. But the question is, how much do you actually need in order of you to start trading? One thing that I've came across is that a lot of beginners underestimate the amount of capital that is needed in order of you to start trading. Because one thing that I've seen is that people actually do get started in the markets, but they start with amounts such as like $3, $5, and when you convert that into rands, that is more like 50 rands or 100 rands, because brokers out there do allow you to deposit as low as 50s and 100 rands. But what is the actual amount of money that is needed of you to start trading, but not even just trading, being able to at least start making some decent money that will be able to just give you that breakthrough that you need? But one thing that I want us to do before we dive a bit more deeper into this topic is that I need you to understand and fully know that this is definitely not financial advice. This is only for educational purposes, and as well I'll be using information that I came across in terms of working with thousands of traders, and I as well myself being able to be one of those traders that started off with the wrong mindset up until I came across some information that allowed me to be able to just trade profitably. So let us now get straight into it. If this is the first time on my YouTube channel, my name is Mutupi, and I am glad that you actually clicked on this video to stop and watch it. I've been actively trading the market since the past 8 years. I started trading at the age of 19 years old with as little as 300 rands, which when you convert that to dollars, that will only be $20. That was the first amount of capital that I started trading with, and since then I've been able to trade with amounts such as $100, $1,000, all the way up to hundreds of thousands of dollars. I want to guide and help that one person that are asking themselves what is the right amount of money to be able to just get started in the markets, so that you'd be able to know the phases of capital that you are going to need in your journey. I want you to understand at first that there are different types of phases of starting capital that's going to be needed in your trading journey. So the very first phase, which is the learning phase, I'll see people starting with numbers as low as $10 all the way up to $100. And this is just for you to be able to just go through a learning process. So a learning process would be you being able to understand firstly how to execute trades, how the market moves, just basically being able to understand the simplest, form of how the market works, and as well being able to understand how currency moves, and as well seeing in terms of when the market is volatile, what goes on, if the market is slow, what goes on, understanding different types of sessions, more likely being able to just understand the markets much more easy and much more clearer. And on this phase, that's when a lot of people would normally start off first with a virtual account, which is a demo account. But one of the mistakes that people do when it comes to demo accounts is that they go and open a demo account on a big capital. Like let's say for instance, they open a demo account on $100,000 account, and then what that does is that they execute trades using one lot, and then maybe the trade goes in their direction a few pips, then they meet like $400, and automatically they start thinking that they are gonna make that money once they get into a live market. But they don't realize that it's different on a live market, because once you're able to get on a live market, automatically first of all you won't even be able to execute a trade on one lot sizes. You won't have enough capital to execute a trade using one lot sizes. And secondly, even if let's say for instance you fund a bit more capital and then the trade does get executed, what it means is that if it goes against you, there's a higher chance that you can literally lose all your amount within a split second, because at first you don't know what you're doing, you're just getting started, and the whole point here is for you to learn. So normally with the learning phase, which is the minimum, that's when you'd see people starting with as low as $10 to $100. And once you are able to be comfortable trading with this amount of money, that's when you'd be able to move over to the next step. But on this first step, one thing that I also want to say is that fortunately with brokers, there are things such as micro accounts, which means that for people that are looking into getting started, the second link that is going to be in the description is where you can register with the broker. You can as well open yourself a micro account, and on the micro account you'd be able to fund with a minimum capital anywhere between $10 to $100. You'd be able to just execute trading on a micro account, which is much more better for beginners or someone that is just looking into practicing and understanding how the market works, especially on live account. So the next phase is going to be more on a small real account, which is going to be an amount between $100 all the way up to $500. So this account here is more likely to just teach you a bit more about patience, being able to teach you a bit more on about you understanding how risk management works, because with this, what you're doing here is you're just going to be playing around with lot sizes, being able to see when to scale lot size, when you should be able to execute bigger lot sizes, and as well how to go about managing your trades, like stop losses, how you can adjust it and so on. So this account is not like, to make too much money, but it's just for you to be able to understand risk management and as well be able to manage those emotions, because a lot of people out there, they do happen to get in right, they get the skill, but the skill too kick, meaning that they go to a very big account immediately and then automatically their psychology was not in alignment with that capital. Meaning that when you see just it going against you a bit, you start freaking out, you start thinking too much because you're not used to seeing that much money go. So what it does is that when you're able to scale your account bit by bit in terms of these phases that I'm breaking down to you, it'll be easier of you to be able to master the psychological side of it and as well be able to master the risk management. So obviously one of the go-to methods that I like to do is when an account is at $100, normally it's best to be able to use lot sizes like 0.01 and $200 0.02, 300 0.03, 400 0.04, and as well $500 you can be able to play around with 0.05. Do not try to break that limit. Like I did say, trading on a live account is more different compared to trading on a demo account. So here you need to be able to just scale as your account grows, but at the same time be able to grow your mindset while being able to just make sure that you're still respecting and sticking to the same strategy, same risk management strategies, and as well you are respecting your trade plan. So now moving over to the next phase, and now in this phase you'd be trading with an amount between $500 and as well $2,000. So what this does is that now you are a bit more advanced of a trader, meaning that you know how to manage risk, you know how to, what size of lot sizes you need to use, you know how to manage trades when they go against you, know how to manage winning trades. So it's not like, you are entering with a gambling mindset. At this phase here, you already know how the market works, and as well, you're even able to invest a bit more money because you know that most definitely there is a higher chance that you're not going to blow the amount of money, but instead what you're going to do is that you're going to easily grow it. So here at this phase, what you'll be focusing a bit more on is having a bit more flexibility in the markets, being able to just improve your strategies, being able to just tweak here and here, meaning that 1% of things that are not working, trying to just improve it so that you are able to get better returns, better profits from the market, at the same time bettering your risk management strategies, because now you're understanding that your account is growing, which means that the more money you make, the more you're also exposed to risk. So what you're doing here is you're trying to just limit that risk, but at the same time be able to just enjoy the fruits of your rewards, which is the strategies that you've been able to learn throughout your journey, and as well being able to just be a profitable trader, to be able to even manage funds such as $500 all the way to $2,000. I understand that most people wouldn't really have this amount of money to start off with, and some people do have it and they don't have the knowledge, so they just start and fund this amount, which is a very wrong way of looking at things, because this way you are going to lose more in the markets. But when you are at this level, in terms of already been through the other stages that I spoke about, it's much more easier of you to be able to trade with such capitals and at the same time be able to see some returns while trading as well. So the next phase, which is going to be the last phase, is now you being able to trade with a minimum of at least $3,000. So I suggest somewhere between $3,000 to $5,000, but anyways, the more the better, because at this level here, what it means is that you are now treating trading like a business. You already know what strategies work for you, you already know how to manage risk better, you already know how to manage your psychology, your mindset, and as well your emotions. So at this level, you're not even scared to put in a lot more money, because at this level, most definitely you're not even going to blow all of that money that you're trading with. In fact, at this level, what you're doing is you're even looking into access to getting more capital. So that is one of the best ways that you can go about trading, being able to treat it as a business, because most people enter with a gambling mindset, and automatically these are the people that will be trading for 3 years, 5 years, 6 years, but they still don't see any profits, because what they do is they enter, they make some money here, and then the next week they lose it all. But with you, when you're at this level, automatically what it means is that you already know a lot of things. There's never a time where you're going to be able to trade with lesser than this amount. You're always going to be scaling and looking into growing. So I broke down all the phases of accounts in terms of the levels that you'll be trading with and what each and every level represents. But now I want us to speak a bit more about leverage, because I understand that brokers allow you to be able to have a better leverage when it comes to trading. But now this can be a good thing, at the same time it can be a negative thing, because if you don't know how to trade, if you haven't got the right risk management strategies, automatically it means that you are going to lose way more than you have in your account. If you've got the right risk management strategies and you're able to employ your psychological knowledge and as well your emotions into a way whereby you know how to react when the market does a specific thing, then this way it can be the best thing ever, because with just like $1,000 you can be able to trade with amounts of like $100,000, and that is using a leverage of 1:1,000. So it all depends on the type of leverage that you'd be using when it comes to the markets. I do have a full video that speaks about how leverage works, so I'll just make sure that I also put it in the description so you are able to go and further your knowledge in terms of learning more specifically about leverage. Another thing is that looking at this question, how much you really need in order of you to start trading, truly it all depends on what your trading goals are. Like, let's say for instance, if you're just looking to grow your capital, let's just say for instance you're trying to grow your capital in the next 3 years, and you've got a specific amount of capital, let's say you want to reach. So obviously now you'd need to look at, do you have realistic goals? So looking at some of the examples, some people would have a goal of making $100,000, let's say for instance, but maybe they want to fund only $10 or $50, on which that's not going to be realistic enough, because at first you haven't even got the skills to be able to hit those numbers. Because truly speaking, guys, you need to understand that there's people that can do that. There's people that can take, let's say for instance, $100 to $10,000, $100,000 and all those, but that all comes back down to the skill. These people have been in the markets for the last many years, and at the same time these people have been able to know, if the market does this, this is how I react, this is how I handle. So even if you try to even like follow, see how that was being done, at some point, because of you are not in the same mindset, you are also not in the same frequency with them, and at the same time you don't know some of the management methods that they're using, it's going to be hard of you to be able to hit those numbers. So that is why you'd see that even with signals, we can be in the same signal group, signals can be sent out for all of us, but some people would make profits and some people still lose, and you'd ask yourself how, because it was the exact same signal. But I want you to understand that when it comes to people growing accounts significantly, that is just because of the skill. But most of you guys do not yet even have the skill to do so, which means that if you've got big goals of numbers that you are looking to achieve, obviously you'd also need to fund a bit more capital. But if you are looking into growing your account and use the compound methods in order to be able to hit your goals, that also makes sense. Because one of the ways that I done it back in the days is I started with $100, and then each and every month, whatever that I would make from my side hustles, I'd be able to just refund it into, my trading account. So every time maybe I made $50 from the market in a month, and maybe at the same time I was able to make like $70 hustling. So I'd put that all together, and then now I have a bigger account, and so on every month. Because what that done is that it allowed me to be able to grow my account quicker, at the same time not being able to over risk it. So it all comes back down to your goals. What goals do you have? Obviously you need to be realistic, and at the same time the amount of capital that you're going to fund is going to be in relations to your goals. If you are looking to just do this for a side hustle, maybe replace your income, it means that you need to see how much you're making a month. Let's say you're making 20k a month. What you'll need to do is you'll need to see, okay, what types of percentage do you make from the markets? And let's just use numbers like 10% a month from the markets, which means that for you to be able to substitute your income, you'd be able to need 200,000 account balance, and you need to make 10% of that amount, which is 20,000, and now that is the money substituting your account. So that's just one of the ways that you need to see it. So I want you to understand the difference between prop firms and personal funds, because I understand that there are prop firms out there that will help you be able to just get access to capital, especially if you've got the skills to trade. All you do is just buy a challenge, pass those phases that they have, and at the same time be able to just trade with the capital. Each and every prop firms have their own rules that need to be met in order of them to be able to give you capital to trade with, and at the same time you need to buy these challenges at first. So when it comes to prop firms, obviously it's much more better, because if your goal is to make $10,000 a month and you are trading with a $100,000 account, which means that when you make 10%, you are going to be able to just make that $10,000. And let's say the difference between the prop firm is you take 80%, they keep 20%, which now you've made $8,000 in that single month. So that is one of the quickest way in order to be able to get access to capital. But the con of this is that you really need to have the skill, because if you don't have the skill, if you don't know how to manage risk, if you don't know how to trade nicely, manage those accounts and do all those things, it's going to be useless, because you won't make it. And even things like over trading or trying to just double that account real quick, it won't work, especially when it comes to prop firms. But when it comes to a personal funds, if you want to trade in your own pace, not be told how to trade, have your own specific rules and things that need to be met in order for you to be able to trade comfortably, then obviously what you can do now is you can be able to just focus more on personal funds, which means that the amount of money that you have in your brokerage account is the amount of money that you really have, and whatever that you make is what you take, what you keep home, and you can withdraw anytime. So you need to also do your research on the two differences between the prop firm and as well personal funds. But like I did say, this one here would need you to really have the skill, which is the prop firm. And with the personal funds, even if you don't have the skill, but at the end you are losing your actual money. So one of my final thoughts is that it's very important ultimately to be able to respect and understand risk, because most people underestimate the power of risk management, especially on a small account. I see people saying, "No, but this account of mine is small, why should I even respect the risk?" But they don't know that when it starts at the bottom with those risks, when it starts at the bottom with the discipline and being able to respect it, what it does is that even when you get access to larger amounts of capital, you'd be able to use the same principles. I know that there's a lot of people out there that think that, "Oh, I'll start this habit when I'm out of this situation," or I'll start respecting my money, or really taking down notes on how I spend my money when I start making $1 million. But they don't know that for you to even get there, you need to start doing that right now, and you'll never get there because you are not going to do the habits that are going to lead you to there. So one of the best ways, like I did say, for me to be able to grow my accounts was I started with like a specific amount of capital, like $100 each month. Whatever money that I was making from my side hustles, I'd fund it into my account. At the same time, my account would slowly grow, and I wouldn't withdraw it immediately up until I've hit a number that I was comfortable with. And then later in the years, when I started coming across prop firms, because me, when I started, I didn't really know much about prop firms, but when I started coming across prop firms, that was when I took advantage of them as well. So whatever money that I also made from prop firms, I was able to fund them into my accounts. Others, I was able to just use them for other investment purposes, and that actually helped me a lot in my journey. If you happen to have found value from this video, I need you to just like it, and at the same time subscribe right now. But understand that these videos are made to help you be able to go from where you are right now into helping you become a profitable trader, because like I did mention that I have been trading for the last 8 years, and during those years there were times whereby I was not profitable, I was hitting stop losses, I was going through some tough times, but at the same time there were times whereby I got my big breakthroughs and I experienced good trades that actually changed a lot of things for me. But I'd love to see the same thing for you. And for all those people that are asking themselves how you can actually be able to get access to some resources that we have community, the very first link that will be in the description is our Telegram group. You can get access to some free resources that we share, so you can always be updated when it comes to the markets. And at the same time, if you are looking for a private community, the third link that will be in the description is where you'd be able to just get access to a private community, and there is where you'd be able to ask questions, be able to have a structured course that's going to teach you from A to Z, and most importantly, you'd be able to just be connected with like-minded individuals. But it is your Belly's Famutupi, and I thank you so much for watching this video.